Okay, so tonight I'm going to go over trades I took on gold and oil today. Of course, we post in the Discord as we're taking them, and this is September 10th. So gold and oil. There were a few trades on both of them. So I'm going to go over exactly when I took them, why I took them, and you'll see every one of the trades. So I'm going to jump right into it. So let's get started here. All right, so first we're starting out with gold. So we basically look for a couple zones as we're trading. We use trend lines, but we also use zones. The zones that we use are off of 4-hour time frames. So we go out to a 4-hour chart or even a daily chart if we can't find something on a 4-hour. And then we look for a swing. We look for a swing low, a swing high. So a swing up above where we're at, and a swing from down below where we're at. And then we'll mark those two areas as zones. The reason why we mark them as zones is because then as we're on a lower time frame trading, it's kind of hard to miss when a zone pops up. So, and you know exactly what it's from. You know that the zone is from a 4-hour time frame. And the reason why we want to be aware of that is because if you have a huge swing down, you'll see my yellow zone right here. So if you go out to a 4-hour and you have a huge swing down, then a huge swing back up on a 4-hour time frame, that turning point, you need to be aware of that. You have to be aware of that. Is where the market turned, where that price level was. So basically, you can identify them. I mean, and we just mark the wick. We don't mark a whole candle. Okay. So this morning when I came in and finally got here to my desk, I had seen obviously that gold was lifting off a zone, and it was coming in and making higher highs and higher lows. So I thought, I missed it. I really did. But our next zone is on up there quite a ways. Okay. So I thought, well, right after I sat down, and these are 1-minute candles, so it was in here, and then it made this push up past this high. Okay, past that price level right here. So I thought, I'm going to go ahead and throw one on. I just went on with 1 micro. It's kind of disgusting just to have one, but that's all I did. I just threw one on. And if I would have done it down here, I would have put on more contracts. Okay, gone in with 10 or 20. And that's typically what we're going in with, is 10 or 20. I'm only going in 1 because it could have very well retraced back to this trend line or all the way back toward, this high in here, right above the zone. So a little riskier trade, less contracts. That's just how I do it. That's how I recommend doing it. If the trade's riskier, if you have reasons to doubt that it's just going to take off from there, well, you need to go with less contracts. So I went in with 1. Let's start the day off easy. And then it went up, and it actually pulled back here and broke the trend line. So I was up for a bit, didn't move my stop to break even or anything. I thought I'm just going to give it room. If I'd have moved my stop to break even, I would have got stopped out here, and I would have probably been trying to re-enter, honestly. Look for another area where I could have got in long. So I didn't have multiple contracts on. If I would have multiple contracts on as it pulled up, if that's enough for you to pull partial profit, then you would have closed out partial profit. But I wasn't in that situation. I only had 1 on. So when it came down here, it closed. So I closed it because my stop originally was down here. But when it broke the trend line, that means to me it's a possible short. And then I want to see a bounce. I want to see a pullback and a bounce before I get in. So that's where it closed. So that first trade was a small loss, one contract loss. I got back in short. Let me just move the chart over. on this pullback here. So after that, I closed out my short and it went a little further. Well, then it popped up, moved sideways a little in here, and I got in on that candle right there. And that's when I got in short with 5 contracts. So I put 5 on, and then when it dropped to back to my zone, and again, this is a 4-hour level of price that you need to be aware of. So it doesn't always stop right at them. I mean, it's not like a magical price level, but a lot of times we see where the turns will happen at the top, middle, or bottom. Sometimes they'll go through and then they'll turn around and go all the way back up. So we have that too. So it is just a firm area that you need to be aware of. So when it pulled down there, I went ahead and closed 3 out because it hit my 4-hour zone. I thought, okay, let's close 3. So I got 3 closed from there to here. And then when it pushed further down, because it's still making lower lows, lower highs. You know, here's a high. There's a lower low than this one. Pulled back here, lower high than that one. Pulled back, lower low, lower high, lower low, lower high, lower low. Okay. Well, when it pulled back in here, so it tapped, this is a 4-hour trend line, uptrend line. So it tapped that as well. And then when it pulled all the way back up to the top of the zone to test it and came in, and this red candle formed a higher low, that's when I bailed. I went ahead and closed 1 more off, and then I had 1 running. I closed 1 off because I thought I want to get the profit here, you know, from here to where I entered on this 1 runner because it formed that higher low. So it very well, to me, formed a higher low. Would it form a higher high? So if it would have, then I would have had to bail in here, which is around the same price. So I just wasn't willing to do that. I wanted a little extra on the runner. So instead I missed out on that 1 runner, still had 1 on. Now we leave the last 1 or 2 on until things turn around. Because sometimes you'll get a good, healthy pullback. And then it just keeps going short. So we never know when they're going to keep running. So that's what the 1 last runner is. It's kind of like one of those things like, well, if it's going to keep going, it's going to take me with it. If it's going to pull back and signal to go the opposite direction, well, I'm going to lose some of that profit. And that's what happened here. It pulled back and then came down, formed a higher low, and then broke that level. Now, someone in our Discord actually posted this image out there as well. And I just noticed from his post, and I was like, well, that's a head and shoulders pattern. That's all it is. So, you know, once the neckline's broke, ideally, if they pan out, then it just keeps going up to where it started over here. That doesn't always happen. I've seen plenty of them fail. So I went ahead. I did not get in as soon as I closed out, or as soon as this one closed out, because I had moved my stop down too. And I had moved my stop aggressively. I moved it down above this high right here on the runner. So it was up above that high, never to the point. So this didn't take me out, but then it took me out over here. So when it took me out, it was also, these candles also broke this high over here. Okay. So that's when I got back in. I got back in when it pulled back right here on that little red candle. So when I got in on that one, and I got in just with 2 on that. So I got in with 2, closed 1 out here. My thought was, obviously, it was going to go back to where the other side fell off a head and shoulders pattern. And it even went on further. So I actually closed 1. Oh, that first one was a loss, by the way, that little one. This 5-lot trade was a winner. And then this 2-lot trade ended up being a winner because I closed 1 out here on this green candle right there. Sorry. So it closed out somewhere in here as it was going up because it was about to that high. And I left 1 runner on, and I did move my stop to better than break even. So I had no issues there. That runner was protected. Well, then when it came down, this big healthy drop here, it ended up closing out the buy. I closed out the buy and then took an order short. The reason why I waited is because I was waiting for this price level here to be broken. That's why I waited. I didn't like the way it broke this one over here because I thought it might pull back. It might retrace because it had formed a high, low, lower high. I was looking for a lower low to form. And it just never happened here. The lower low didn't form till here. So I went ahead and jumped in only with 2 because I thought, well, I don't want to get hammered if it doesn't go any lower, and which it didn't. It pulled back. So it pulled back here and hit the stop. My stop was right above this high right here. That's the level I was looking for it to break, and the stop was actually right above that level. So I got stopped out when this candle was pulling up, and then when it pulled back down and did not go to this low, that's when I jumped back in with 3. Okay, so we had the small loss in there. So we actually had on this trade I did 2 winners or 3 winners, 2 losses. And the losses were small compared to the winners. That's because of the runners. The runners help off balance that. A lot of times with the runners, what will happen is if things trend a little bit, those runners will offset your losses. So especially if they're smaller. And that's what you want. You don't want your losses to dig into your daily profit that you need to survive, to get you a paycheck at the end of the month. So basically I bought 3 off that bounce, this green candle. So basically here was a low, it pulled back above that price level that I was, marked. So when it did that, I thought, okay, let's watch it come back and test it. Came back to test it, went a little deeper. And then when it gave a green candle, that's when I got in because it didn't go this far. I thought, okay, higher high than what was here. And then green candle, higher low. So that's when I got in. So I got in there. I closed 2, got in with 3, closed 2 over here because to me it was just nothing but sideways. It was after lunch. It's like what was it, 1 o'clock? Yeah, like 1:20. So I'm like, okay, it's pretty much dead for the day as far as I was concerned in the afternoon trade. So I closed out 2 and then it moved my stop. And then it actually came down here and hit my stop on that one. And I was done for the day on that one. So that's how gold panned out. So like I said, 3 wins, 2 losses on that. Be down on oil here. All right, so the oil. This one trended a little bit better. I did not get in till this bounce. So again, as you look at oil, I have multiple zones. It had just pulled off of one zone. Let's see, this was what, about 9 something? Should have been around start of U.S. session, 9:45. So it had been pulling up, pulled up to a zone. And again, a lot of times they'll bounce off the zone. If you were in long here, it gets to a zone, you hold your runner. The only time you would close your runner is once it breaks a trend line like this. Once it breaks a trend line, it could possibly go short. You either do that or you wait for structure to build, in which case you're getting out a lot lower. So I wasn't in. I was not in this long. It bounced off of that zone. I mean, just tapped it. And in here, it just fell into it a little bit. So I got in on the pullback. So it dropped, pulled back, red candle, I got in. So that's a retracement or pullback. On the 1 minute, I'm normally drawing like a retracement line. And I don't let it extend on past because then your chart gets to where you can't actually read it. So what I normally do on a retracement line is I draw it in and it's wanting to attach to the candles. I don't want to do that. So I'll typically draw that in and retracement up, and I will not let it extend. I don't want it extended out. So basically, though, I'm looking for any time it starts pulling back, I'll draw a line like that. And then I'm looking for a break of that line, break of the retracement line. That's what that candle was. Not very impressive, but it was a break of it. So I put 5 contracts on there. When it pulled down here, this big push, I like to only close out partial after what I need per trade. So X amount of money you want to make per month that you need to make to survive. Divide that by 4 weeks, divide that by 5 days. If you're trading every day, that's how much you need to make for the day. Let's say it's 400 a day. Well, then you need to lock in that money on the base part of your trade. And that's where we close partials out. And then we let runners go in case it just keeps running. So I only got in with 5. And then when it pushed down here, I closed out 3 of those. That was locking in my trade goal. I was locking in how much I need to see per trade per day. So, and I look for 2 to 4 trades. Typically, I'm in anywhere from 4 to 6. So it pulled down, closed partial, moved stop, because stop was up here originally, moved stop above this high right here. Guess I should have this on. So move stop above that high. It went sideways, pushed down to the zone, trailed the stop by moving it here. Still had 2 on, pulled back, tapped the back of that downtrend line. That downtrend line was drawn originally off there, that point to this point. And then when it kind of wicked past a little here, I dropped it to there. So a good solid downtrend line it had been following. When it moved sideways here, it basically tapped that area and dropped. And then when it pulled back here, it tapped that area and dropped. So good, solid downtrend line. So it just kept pushing. It pushed, had no real problem sitting, pushing through that zone, came down to this as an old zone. That's why it's gray. Not really using it at the time, but I still need to be aware of it. So, because it was a little further back in time. And it pretty much pushed right down here. I closed one. I'm like, it's almost to my green zone. How far is this thing going to go? Let me go ahead and close one more out. So I closed one out, have 1 runner. When it pushed through the zone here, yep, I moved my stop. I moved my stop just above this green one or gray one. And I thought when it settles, if it has a chance, I may move my stop in here, in between these 2. And that's kind of what happened down here. It pushed on further and pulled back. When it pulled back in here, because remember, I only have 1 on at that time. And I could have done more with this than I did. But I only had 1 on. So I added 1 more contract back in. And when it pulled down, I was going to close that. Here was my plan. I added 1 more. It just pulled back. I added 1 more contract in. My plan was, if it goes down and gets near this level, I'm going to close that one out. That's just a little extra trade. Okay, you can do it with 3, 4, 5 contracts. Well, what happened is it never got there. It got about halfway down. Halfway between the 2, stalled out. I thought I was still good when this candle closed because it closed below this area of consolidation here. Nah, it didn't. So it pulled back up and pulled down. And then when it broke that trend line, I was out. I got out because at that point right here, I did not jump back in long. Okay, I got out because it broke the trend line. I did not jump in long right away because for me, I'm looking at the swings, the highs and lows. Well, it made a low here, came up and made a high, higher low, higher high, higher low, broke. I was not going to stay in that because I could see it going up and pushing back through that zone possibly. So I just bailed. I closed out the trade. So winning trade there. And that was a decent sized winner because of the runners. That's what the runners will get you. They'll get you extra on your trade. So at that point, I'm watching this fall and I'm not in it at all because I need to see now. It didn't pull back to test this price level. Is it actually going to go through that? I don't know. So I put a trend line down there. That's the dashed one. It followed that, kind of wavered back on the line, popped back through. When it did this pull up right here, when it pulled back up to the zone, I drew a retracement line. When it had the second candle here, I thought, okay, it's retracing back up to that that green zone. So I drew a retracement line. And my thought process here on the red candle, where it broke the retracement line was, it is not going to go long because it already tapped that zone 3 times. And I know it's not right to the tick, right to the price. You shouldn't expect something to go exactly to the price. So it should go somewhere close. Well, when it went up here and stalled out and turned, basically I thought, okay, that has basically hit near that zone 3 times. I think it's going to go short again. My target should be this low here and then this one down here. So I just put 2 on. I'm like, I'm not going to get crazy with it. It was right before lunch. It was about 11:16. So I thought I'm just going to throw 2 on. And then we had a nice push down off that. And it hit here. And I only had 2 on. I didn't want to close either one amount. I just thought, you know what, I'm going to let them go. And it pulled back a little bit. I thought, okay, it's just a pullback to test this low over here, to test that price level that I had on my chart. So, and I'll often do that. If it drops to a point, I'm going to draw a horizontal line across. Basically, that's what it did. It came over here, and then it broke this level here. I closed one there. I don't know what you want to call it, panic mode or whatever, but it was making higher highs and lows there. I thought, well, let's close one. And then I realized over here when it broke, I'm adding one back in. So that was, it is what it is. So I still made money on the one I closed because I got in up here, just not as much. So, because I had to get back in. So that was kind of a, all right, moment. And then now we still have 2 on. Then we sat sideways, and then we sat sideways. And then it finally pulled back up through here. And I just closed out. I'm like, I'm done. It was 2:30. I had other stuff I needed to do. So I'm like, I'm not watching this. I closed out. So even on that one, it was still a win because we got in over here on this other drop on it. Wasn't the greatest win, but it was a win. The big win was over here when the runners just held through and it just kept dropping. Okay. So that's just a quick video over gold and oil trades today. I hope you enjoyed. And again, this is on a small account that I'm doing here. It's on one of those $50,000 eval accounts that someone wanted me to show them that I could pass. So that's what this is on. That's why they're smaller contract size than what I would trade on my normal account. Anyways, I hope you enjoyed the video. And that is it for today. I will talk to you later.